Cramer. Welcome to Mad Money. Welcome to Cramerica. People make friends? Look, I'm just trying to make you a little money. My job. Not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You are witnessing, or I hope participating in, one of the most equal opportunity bull markets I have ever seen. After allowing the data center power providers and the Palantirs to run free for the first half, this market has discovered the likes of Home Depot, Builders First Source, Toll Brothers, and Lennar, and a host of other stocks that can keep going up for many a day and still be nowhere because they've been such laggards. It's the best kind of bull market, the kind that broadens to new sectors, which explains how this new group of winners could allow the Dow to gain 400 points as the dipped 0.11% and NASDAQ declined 0.82%. A lot of the winners from the first half in that NASDAQ. Now, I got to tell you, I'm jonesing on a dual track right now.
All aboard!
Look, I kind of can quote you chapter and verse your analysis of the tape. Some would say it's the 2-year, the 10-year, the Chairman Powell rate cut dilemma / presidential harangue. That's the ticket for them. Or I can say that we have an idea-generated market. And today's ideas stem from the Senate passing this budget bill that has some good things about housing in it. So newer, less jaded buyers say, okay, that sounds convincing, so let's go buy anything housing. Buy. Yes, that's how these more novice buyers think. And they've got the money that used to be ours. They didn't steal it. We are experiencing a $100 trillion wealth transfer from baby boomers to Gen X, Y, and Zers. And they're cutting their teeth on stocks right now, doing just what I'm telling you. It's easy to spot housing wind extended to beaten down stocks like a Target or Kohl's. I'm not a fan of Kohl's, but I am a fan of Target. And the new buyers, the people who aren't trapped by Fed dogma, know that there's fundamental worth to Target, and it's probably higher than here. You don't need to worry about what that's worth truly is yet, because we're nowhere near when Target reports. It also bodes well for the banks. Any banks, including Bank of America, Wells Fargo, and my favorite right now is Capital One. Now that Capital One is merged with Discover, its stock has potential to keep climbing because it's put together a credit card powerhouse, and I know it's up a lot, but it can go higher. Plus, now that the banks have all passed the Fed's stress tests, they're aggressively raising their dividends. Tonight, after the close, J.P. Morgan, Bank of America said they plan to put through 8% dividend boost. Wells Fargo, a stock that's owned and beloved by my charitable trust, put into a 12.5% one. Many more are on the way. This kind of analysis sounds so lacking in sophistication, so pedestrian, doesn't it? Am I seriously suggesting that stocks are poised to go higher without a thorough analysis of Chairman Powell's brainwaves? Yes. Why? Because this is a pedestrian market that does lack any sophistication to begin with. So if the Senate's version of the big, beautiful budget bill, which makes the mortgage deduction permanent, ends up passing, then it's obvious you should be buying the housing stocks because this market is run by Captain Obvious. And you can get ahead of Captain Obvious. Throw in that there's a buyer of anything housing-related, a vehicle called QXO, run by Brad Billionaire Jacobs, hostile or not, and you got a pretty darn good story. Of course, some of the rally is nothing more than the left-behind stocks playing catch-up. The drug stocks had a rare day in the sun. I wish I had something good to say about them. Maybe it's enough to say that Bristol Myers has a faint pulse, one that lasted until the end of the session. Merck looks good on the charts. Oh, and as painful as it might be, we have food stocks going higher. I spy Hershey's up huge. Heaven forbid Kraft Heinz is higher. Now that we've identified the distinctly counter-trend rally, one that could last for a bit of time, let's consider what the best of breed of those industries are so maybe we can do some buying still. Housing. We're going with Toll Brothers, which had a magnificent quarter and is so well run by Doug the Bomb Yearly that I see no reason to stray from this high-end home builder. There's something soothing about buying a company that makes million-dollar homes when the people who can afford these homes just got an enormous tax cut. The retail rally is a little more difficult. You might want to shoot the moon and buy Dick's Sporting Goods, betting that the Nike turn could benefit them now that they're acquiring Foot Locker, but the stock just ran up 30 points on that news. I say go with Home Depot. I know that the last acquisition they just made, GMS Materials for Professional Contractors, seems a tad hasty, but the SRS deal from last year seems to be working out well. Home Depot is more than just a storied company. It's a company that reinvents itself regularly, has a strong culture. This time it's really going for the professional, the contractor. More important, it almost always works. Long term, you really don't want to bet against this one. Let me give you another one that has a 3% yield and has just completed a dynamite acquisition. Contour Brands. the maker of Wrangler and Lee jeans, which did miss the quarter not that long ago. But bear with me here. I was with my daughters in British Columbia 2 weeks ago for some hiking, birding, cold plunging, and helicopter fishing. It was cold and rainy, just like we like it. We bought all sorts of layers, but not enough of them. So we had to borrow clothes from the resort owner. And we borrowed what we affectionately called Heli R's, which are actually Helly Hansen's. That's a fantastic clothing brand just purchased by Contour Brands. I cannot believe they practically stole this one for something like $900 million, exact price not disclosed. I think the acquisition transformed this company and makes up for any mistakes by Wrangler or Lee on the way. I think they should call the company Helly Hansen. You want consumer packaged goods? Well, then that's easy. You buy Procter & Gamble because the dollar's been incredibly weak, and the company's the principal beneficiary of the S&P 500 of a weaker dollar. They sell a ton of merchandise overseas. It's suddenly gotten a lot more competitive. Food's too hard here, although the sightseers always seem to glom onto Mondelez. And that's how to play the counter-trend rally. But what do we do with the very different set of winners for the first half? I want you to consider the GE Vernovas and the Howmets and the Palantirs as stocks that are likely to finish the year dramatically higher from these exalted levels. What do you do with the stocks that have been on a run nonstop for 26 weeks, though? I think you send them on one of those 2-week vacations, like that Southeast Asia or Cape Town, maybe New Zealand. You pay no attention to them. Let them have a good time. Just take them off your screen. Come back to them when the rotation's run its course. Okay, there's one that's not like that, though, Palantir. I think Palantir's, it's taken a rare dip. This one's actually more of a shorter vacation. Palantir's going on a staycation. I say it can be bought starting in 3 days. Monday morning, buy some Palantir. Then after that, you can go over the power generators. Go for the power generators. Remember Palantir. I said when it's at 50, it says it's going to 100. When it was 100, it says it's going to 200. Stick and buy that. Tech, really hard. There's a lot of bad shareholders in these stocks, like the people who dumped NVIDIA and Meta earlier this year without regard for the fundamentals, and the people who dumped NVIDIA today without any sort of intelligence whatsoever. And Tesla, total dice roll. We have no idea what Elon Musk and the man in the White House, who may be the best name caller since me when they called me the Needler in college, are going to do. But they sure don't seem like they're on great terms. So my plan is to have the president give Elon the right to have driverless cars on the interstate. I'm calling that plan shelved. The moral: there are usually ways to make a lot of money, but it's really fun to talk about Elon. Here's the bottom line. If this counter-trend rally continues, so many stocks that sat out the first half will keep running, while this year's big winners go through a temporary cooling-off period, except for Palantir, which has a 3-day cooling-off period. More on that later. Let's go to Drew in Idaho. Drew.
Booyah, Jim. How are you?
Jimmy Chill says he's good. How about you?
Doing great. First of all, I want to thank you and your team for having me on. They're a pleasure to talk to on the way to talk. The team's
good. I'm looking at the team right now. There's like 3 of us. I love them.
They're great. And thank you for the investing club. It's made such a huge difference these last 3 years.
Jeff and I are working. Jeff was off yesterday. It was really hard for me to do the 10-20. I found myself just rambling and talking to myself. I'm sorry. But let's go to work together.
I missed him. So I heard you talk about this one on the monthly meeting last week. I picked up a few shares after earnings a few weeks ago. Its Agent Force product is really compelling, but it's still been dead money since I bought it. How do you solve a problem like Salesforce?
Okay, here's the problem with Salesforce. There are 2 Salesforces. There's Agent Force, which is doing very well. And then there's the rest of Salesforce. And all I hear about over and over again is that business is doing poorly. That's why I've not added to the position. I need to see the quarter. It has been sorry, Mark, but I got to call him as I see him. That's kind of me. Anyway, this is one of the most equal opportunity bull markets I've ever been a part of. Make sure that somehow you're a part of it, too. Don't think it's unsophisticated. Just think it's what's happening. On Mad Money tonight, there's a lot you can learn from the winners and losers in this tape. So tonight I'm identifying the top 5 and bottom 5 performers in the S&P 500 for the first half of the year. Got to make sense of what's happening here. Then Generac shares have been on a tear since the April lows, but it's still down for the year. We got to find out what's going on there. And I brought you Fang, another guy I like it. The guy from Bank of America brought you Magnificent 7. I was a day late because I was too busy thinking about whether it was Yul Brynner or Steve McQueen. I couldn't figure out what was going on. But tonight I'm revealing a new acronym of the stock that made it through this tough quarter. I'll reveal it. Stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.